it's essential the debt ceiling be raised in a timely fashion so we can pay our bills.
I think it's important that this be done on a bipartisan basis.
The consequences of that failure to do so would be potentially severe.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Friday, the 1st of October. Happy New Quarter. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Red October, European stocks drop at the open after September caps the worst month for the S&P 500 since the March 2020 sell-off. China shores up its energy supplies. Beijing orders its state-owned companies to secure coal, oil, and electricity at all costs. European gas prices surge. And Biden signs a stopgap funding bill, but the House postpones its infrastructure vote as Democrats fail to agree on the White House's economic agenda. So first thing is first, we saw the end of the quarter and the beginning of a new one today. And unfortunately, we're starting with a little bit of red. Now, look, it's not huge, but actually there's a lot of concern about the U.S. political machinations, the divisions within the Democratic Party. Over in the U.S., you can see the European stock 600 down some 0.7%. Actually, very similar losses for the DAX and the S&P futures. The focus is, of course, on some of the wall of worries, which is energy prices, supply concerns also as it relates to chip makers and automakers. Overall, we're still expecting this rotation when you speak to analysts into value stocks, and you can see the FTSE down some 0.7%. Of course, we've been speaking quite a lot about the energy crunch and some of the concerns, specifically with gasoline getting to the pumps here in the UK. The DAX 0.8% lower as they're still trying to form a coalition, and we'll see the new chancellor. Now, the price action in Europe as we enter the fourth quarter, investors starting to turn more bearish on equities. Here's how some key voices have been reacting on Bloomberg TV.
Equity markets have been confronted to a kind of wall of worries in recent weeks.
Over the next 3 to 4 months, we're facing a host of uncertainties.
I wouldn't be surprised if we get a little bit more selling over the near term for several reasons.
The market is certainly set for some form of correction.
We are in I would say, a small correction.
We continue to believe that investors are just underpricing the risks.
Pick your reason to be bearish, hard to be bullish when there's so many kind of missiles coming out of nowhere.
Well, we're joined now by BlackRock's Vice Chairman, Philip Hildebrand, for an extensive conversation to actually also make us smarter on what exactly is going on and some of the challenges out there. Philip, first of all, thank you so much. It's so nice to see you in person and have a conversation as if it was 2019. When you look at some of the market worries, and it's inflation, it's energy prices, it's also, this transition into green that could be much more difficult to do. What's top of your worry list?
I think the world is coming to terms with the fact that inflation will be higher longer term, something I'm convinced about. And that's probably kind of putting the overall, worry about how's this going to work, how's the timing going to work. And we have this restart dynamic where we still have all these supply chain issues that are creating all kinds of strange short-term effects. So I think those are the two factors that are putting this into kind of more worrying context.
But so is inflation sticky now? Is it higher than actually we think it is and for longer? Or do you still believe the central banks that for the moment it's transitory, but maybe deeper in the longer term?
I think it's probably the wrong frame to sort of ask whether it's transitory or persistent. It's really both, in the sense that, we're going to have this restart dynamic that means we're going to have very high inflation for the next 12 to 18 months. But I think the key point is inflation will settle at a higher level than what we've been used to the last couple of decades. And that's something the market has to come to terms with and get used to. And by the way, it's what the central banks want. So I think in some ways it's what we're seeing is this strategy of makeup, of putting inflation higher than the usual target. That's what's happening.
But the central banks are also at pains in saying we taper, but we're not raising rates.
Yeah.
So is that a misnomer? Actually, should the market start repricing for possible interest rates rises sooner than we think?
No, I don't think so. I think with the exception perhaps of the Bank of England, the central banks have been very clear that raising rates is not on the agenda anytime soon. And I think the tapering, frankly, is not the big story. We should sort of almost see through that, ignore it. The real issue will be at what point do you have to adjust the interest rates so that you don't unanchor long-term inflation expectations. That's going to be the key challenge. How do you get inflation to be higher than what we're used to? without triggering something that you don't want in terms of loosening inflation, long-term inflation expectations.
That could come when? Mid next year?
I think I'd be hard-pressed to see any real action on interest rates next year, perhaps with the exception of the Bank of England. So I think we're looking at early 2023 as the kind of lift off at this stage, right? Now, you never know what happens until then, but that would be the baseline scenario.
Philip, when you look at some of the energy crunch, right, and some of the supply issues, there's half the people we speak to think that this is because of the pandemic, that we haven't readjusted and we just weren't ready for this huge pickup in demand and, economies restarting the engines. Others are saying there's been chronic underinvestment in our old economies or our old industries since 2009. And actually what we're seeing with energy will happen across the board in the next 2 years.
I think it's a little bit of both. So there's no question that what we're seeing, the extreme kind of dynamics, both on growth and inflation, some of the price moves, that's a restart issue. That's the extreme pressure on supply chains that associated with this restart activity. But I think we're also going to see a world where, inflation will drift higher. The shift to sustainability is inflationary. I think the reworking of global supply chains to have more resilience built in raises production costs. So we've got a number of factors in play. And then very importantly, the central banks wanting to have inflation go higher. So all these things tell me that it's a bit of both. Some of this will settle over the next 12 to 18 months, but we're going to end up with higher inflation.
But is that shift to sustainability going to be slower than we thought? Because we are realizing, and even in the UK and in China, that it's actually much more difficult to go through this transition quickly.
It's very hard, and it has to be fair and just, right? What we don't want to happen is to have this transition create social and political issues. So we need to ensure that we have an alternative to fossil fuel. So we have to invest. This is the key issue, I think, that will come out of COP, this need to invest tremendously. Tremendous sums have to be invested, trillions of dollars, in order to create the alternative energy sources that will be required. If we don't do that, all we're going to end up with is tremendous price effects, which will create all kinds of social problems. And that's the challenge of the COP. It's really a story about investing on a vast scale, perhaps bigger than anything we've ever done, in order to fund this transition and make sure that we create it in a way that is fair and just.
What's the main challenge for asset managers? So I don't know whether the DWS probe on greenwashing in asset managers created some sort of panic at all levels, that asset managers have had to look internally and say, actually, what are we labeling with what etiquette?
Yeah, I think that's part of it. We're still in a world where we don't have perfect standards. That's going to take some time. So our response for now is going to be transparent as to the products we offer, so that the client sees what he gets or what she gets when you label something sustainable. But I think that the long-term story is clear. We're going to continue to see a vast reallocation of capital towards sustainable products, and our job as an asset manager is to increase the scope of our product offering, ensure that it's transparent, and continue to innovate together with the index providers to make sure that we can offer more choice to the clients who want to undergo this journey towards sustainability.
I mean, disruption is probably the name of the game. At a time where you also have, U.S. politics that maybe aren't functioning as well as we thought they would, certainly in the Democratic Party. How much is that a headwind compared to these, huge shifts in capital allocation that we were just talking about?
I think this journey to net zero, as we call it, is one of the most significant, perhaps the most significant transformation of the global economy we've ever seen, perhaps with the exception of introducing fossil fuels in the 19th century. So this is going to be an enormous change over the next couple of decades in terms of how the economy works. That means there's going to be, vast reallocation of capital. There'll be many winners and many losers. And our job, in a sense, is to determine how best to navigate this on behalf of our clients. I think that's the big story over the next few decades. Then, as always, you have short-term political issues. You have central bank issues that kind of come into this. But the big structural story here is this transformation, vast transformation of the global economy as it moves towards net zero.
But how problematic it is actually for valuations? I mean, I was looking at some of the new companies that we're creating in tech that actually no one really knows about. Some of them have a bigger market cap than Commerzbank.
Yeah.
So what do you do with banks at the moment?
Well, this is what Larry Fink has called it the tectonic shift of capital, and that's what it's all about. Capital is going to seek out who are the winners and who are the losers, and what we're going to see is tremendous, I think, changes in relative prices, valuations, profitability, earnings projections, and the market has to adapt. So this is going to be, as any big change, think of the introduction of China into the global economy or the tech revolution over the last 20 years. It's led to the same effects, and this is what we're going to see over the next couple of decades. It's hard to pick the winners and losers, but I think that's what we're here for. That's what clients want us to do, is to try to navigate this, to manage the risk and navigate this as well as we can as we undergo this journey. And I think the key point is we're only at the very beginning of this. I'm convinced that, we've seen a lot of capital shift. Some people are now saying that's coming to an end. There's no way. I think this is the very beginning, the front end of what will end up being a very historic shift in capital towards sustainability.
Philip, thanks so much. Philip Hildebrand, BlackRock's vice chairman, stays with us. We'll talk a lot more about China shortly. Coming up, China's power crunch unleashing turmoil in the global commodities market. So we look at what the world's second biggest economy is doing to shore up coal supplies, and of course what it means as we head towards COP26. This is Bloomberg.
How is Ireland dealing with that blackout risk, those energy prices spiking?
Well, in the first instance, we will manage it over the next while. I think the key agenda item for Ireland on the energy front is wind, and we've been great developers of onshore wind. The next decade in Ireland will be offshore wind, and we have streamlined our planning application framework for investors so they have certainty in terms of applying to invest in terms of offshore wind infrastructure in Ireland. So that will be a key agenda item of ours. And renewables. We have a very strong climate component in our government and in our government programme. And that, of course, is not disconnected from the energy agenda. And there will be challenges of that, there is no doubt, but we are making considerable progress.
Are you worried about the here and now? Are you worried about blackout risks? Are you worried about the amount of consumption data?
Data is taking up considerable demand in energy terms, but we have been robust in terms of meeting that to date.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So China has told its state-owned miners to produce coal at full capacity for the rest of the year. That's even if they exceed annual quota limits, as the country is really struggling with the deepening power crisis. Now, it comes as China is paying the most on record for even the dirtiest type of coal, a sign that the impact the power crunch is having on energy markets in Asia and around the world is pretty big. We're back with Philip Hildebrand, BlackRock's vice chair. Philip, thank you so much, first of all, for sticking around. We're talking a little bit about, China and the transition to green in general, but every day there's more news on China. We worry about Evergrande. There's a crackdown on tech. Are we seeing actually a huge shift in China which could catch investors by surprise?
I think what we have to come to terms with, and this has been visible for some time, that China is not converging to, let's say, a Western economic model. They're prioritizing social issues, political issues over growth, and they're willing to sacrifice some growth. I think that's now becoming clear, and so the market is adapting, coming to terms with this recognition that the promise of convergence that was sort of embedded in the WTO membership 2001, that turned out to be wrong. That turned out to be the wrong assumption. Now, to what extent they will sacrifice growth in pursuit of these social objectives, we'll see. The decline in growth has been dramatic. If you think about Q1, we had something like 12, 13% growth. We're now at 3% growth. That's an extraordinary decline in growth. And so I think what we're going to see, and we're seeing it to some extent already, a sort of shift back to some extent to use monetary tools, fiscal tools, regulatory tools to ease off a bit to ensure that growth can recover somewhat. And I think that's what we're seeing right now playing out in China. But overall, we need to come to terms with the fact that social and political objectives are at least as important as growth.
Is there a risk of a policy mistake from China just because the shift is so big and what they need to do in trying to either stop defaults or trying to get the right type of energy is actually very a vast amount of work?
I think that's the overall theme. If you think about China, if you think about monetary policy in the U.S., if you think about the big spending packages that are debated right now in Congress, there are lots of risks of policy mistakes everywhere, right? That's one of the reasons why I think we're going to continue to be in a world where the path towards higher prices in equity markets is going to get more and more narrow, and we're going to see periods of volatility. Lots of risks, lots of things can go wrong at this particular juncture here, including the COP coming up. So I think we're right now at a moment where generally the risk of policy mistakes is elevated, and that's true for China as it is for the United States.
Now, BlackRock is a bondholder in Evergrande. Do you think Evergrande could default? We talk every couple of days about the dollar coupon payment that hasn't come yet.
Yeah, my guess is the fallout generally is going to be limited in global markets. This is not a kind of Minsky moment, as far as I can tell, as far as we can make out. It's also pretty clear that at the domestic level, where it's a big story clearly in China, the authorities are determined. The PBOC has been pretty outspoken in the last couple of days to ensure that the market realizes that they're there to sort of support the real estate sector. So I don't think this is going to be a big story as some of the stories we saw before the financial crisis. But it does show that when you have this kind of environment of so much liquidity, things do go wrong over time.
So you don't think there's a secondary or third effects? Like, it's not systemic, but as a bondholder, what do you do?
Well, you're going to have some bond holdings, particularly in the index world, right? This is the story we see, but they're really tiny in terms of the overall risk. One of the questions will be, are we going to see some of this manifest itself in clients' portfolios in European banks and private banking? That's a possibility. We haven't seen very much yet, but I think overall the fallout will be limited.
I mean, in the central banking world, I don't know whether it's the Bank of England that has the toughest job to really try and navigate, first of all, these effects that are also because of Brexit, which means that the energy prices is much higher, with GDP that was strong, but actually confidence is turning quite quickly.
Yeah, we're going to see. Remember, yesterday was the end of the furlough scheme in the UK, so I would, if I ran the central bank, I'd want to wait a bit to see what happens in the labor markets. We also know that if you take the U.S. example, we have not reached yet the goal that the Federal Reserve has set out on labor markets. On inflation, incidentally, we sort of have. Actually, if you look over the last 5 years, the undershooting has been made up with the overshooting we're now seeing on inflation. But that's not true on labor markets. So this is the problem if you're a central bank right now. You're still in this restart dynamic where you're going to see lots of volatility on the data. And you have to have a certain amount of patience to see this through and then see where things settle 12 to 18 months from now. But again, I'm convinced that we're entering a very different era from the last couple of decades with inflation that will be at a higher level than it has been.
Stagflation. I mean, should they worry about stagflation, and how much of a nightmare is it for a central bank?
That's not the issue right now. We have very high growth rates. The recovery is broad. This restart activity creates, strong data. My guess is this will settle back into kind of potential growth rates, perhaps, hopefully, a little higher given all the spending we've done, right? Remember, that's the goal here. All this fiscal policy should ultimately lead to higher productivity, more innovation, and therefore slightly higher potential growth rates, which would help with the high debt levels that we'll inherit once this restart period is behind us.
Philip Hildebrand, thank you so much. BlackRock's vice chair there for an exclusive conversation. Now, coming up this hour, coffee breaks get more expensive as global prices surge. We'll be speaking to Andrea Illy, the chairman of historic Italian coffee brand Illy Cafe. That's coming up in about 10 minutes. Happy International Coffee Day as well. This is Bloomberg.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams, there are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there so that the girls over there can have the opportunities to continue their path as well.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquay here in London. Now let's get back to Philip Hildebrand, BlackRock's vice chair. And Philip, we were talking a little bit before about world dynamics, China, of course, the concerns over COP26 and what we can actually achieve. I mean, Europe is also at the crossroads. Angela Merkel, we had the election less than 5 days away. How does it reshape Europe and the axes?
Well, her shoes are hard to fill. On the other hand, no one is indispensable in life, so life will go on. It's very hard to tell what's going to happen. I think domestically, it looks to me like this could be an opportunity for Germany to kind of think about some new dynamics internally. The grand coalition has not been great in many ways for the competitiveness of Germany, the kind of innovation capabilities of Germany, politically speaking. So there's an opportunity there. The big question will be, in terms of foreign policy and European policy, do we see, Germany being really present and driving together with France and Italy the European challenges? And there are many. You have climate, the transition. You have security issues, banking union. So there are lots of important topics on the agenda for Europe, and you need Germany to be part of this discussion in a kind of dominant way. And that will be the question: how does the new government kind of position itself, the new chancellor, in terms of foreign policy and European policy? I think it's critical, always has been, that you have a strong axis between Germany, France, and Italy, so you can really drive forward this project, which is so critical for Europe in the long term, particularly in a world that is more and more kind of bipolar. In the sense of this strategic competition between the United States and China.
Philip, thank you so much. Philip Hildebrand there, BlackRock's vice chair. Now, coming up, International Coffee Day, anyone? More like expensive coffee day. The commodity is up 50% in 2021 as weather challenges top suppliers. So up next, we're joined by the chairman of Illy Café. This is Bloomberg.
From New York City.
We're here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Red October, European stocks drop at the open after September caps the worst month for the S&P 500 since the March 2020 sell-off. China shores up its energy supplies. Beijing orders its state-owned companies to secure coal, oil and electricity at all costs. European gas prices surge. And Biden signs a stopgap funding bill, but the House postpones its infrastructure vote as Democrats fail to agree on the White House's economic agenda. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So, losses in European equities moderating somewhat after a messy start to trading in the fourth quarter. This comes after September markets marks the worst month for the S&P 500 since March 2020. Well, for a look at the markets, let's get straight to Ritika Gupta. Ritika, so the market's not looking great, but better than they were an hour ago.
Yeah, Francine. So moderation here, but of course, no dip buyers coming out here really today. The stock 600 over here in Europe down some 1%, but as you say, reversing a bit of the losses. But over in the US, also pretty bleak picture here, down some 0.6% on futures. This after what was the worst month in September, going all the way back to March of 2020, the height of the pandemic. On the quarter, we did manage out to eke again, but it was a very small one of 0.2%. Also, the worst quarter going back to the first quarter of 2020. We're also starting to see that rotation that we were seeing into cyclicals start to wane somewhat. Now, of course, let's take a look at the 10-year yield here. Now, we are below that 1.5% level. We did go as high as 1.54% this week. And then, of course, I turn to the dollar here, seeing renewed strength. We actually sit on the if we look at the DXY at a 94 handle, this acting as a safe haven in a week where we really have seen both stocks and bonds sell off. Francine.
Infrastructure vote rescheduled today. I mean, U.S. politics definitely playing on the markets.
Yeah, Francine, indeed. We have that infrastructure vote being rescheduled to today by House Speaker Nancy Pelosi. We did have White House Jen Psaki, the press officer, saying that we do see some progress being made, but they just need a little bit more time. And this is the divisions that we have been seeing within the Democratic Party between those moderates and the progressives wanting to link this, of course, to that higher spending and tax bill, the reconciliation bill. But still, Senator Joe Manchin saying a limit of $1.5 trillion. They want $3.5 trillion. Some compromise needs to come from somewhere. We did get one vote, though, taking place. This was, of course, to avert the shutdown, which went as expected with the House voting. There's bipartisan support for that, of course. But the issue of the debt ceiling looming, that, of course, still remains. Big divides between the Republicans and the Democrats going on here. And then Treasury Secretary Janet Yellen, that 18th October deadline, of course, would be catastrophic if they were to miss it. Francine.
Ritika, thanks so much. Ritika Gupta there with the very latest on U.S. politics and, of course, on the markets. Now, it's International Coffee Day today, but this year the celebration may come with a bitter aftertaste. Well, coffee futures have surged more than 40% in 2021 amid extraordinary weather events and supply chain disruptions. As a result, U.S. stockpiles have recorded in September the largest decline in a year. Well, we're now joined by the chairman of Illy Café, Andrea Illy. Andrea, thank you so much, as always, for joining us. And also, I know you had the Premio Leonardo, so congratulations on that. It's a testament to all the things that you try and do also for Italy abroad. On coffee, what can we expect in terms of prices? How bad will the frost in Brazil make it?
Thank you, Francine. Coffee prices are impacted by two elements. One is the climatic shock originated in the first half of the year. In spring, there was a drought in the coffee plantations, which might or might not impact productivity in the years to come. And in July, we also had, exceptionally, a coffee frost, which didn't happen since over 20 years. So now it's still too soon to know how much will be the impact on the next year production. We will better know the impact after October 15, which is the time where the rainy season starts. If there will be good rains, we will be able to see by the flowering how big has been the impact of the coffee frost in particular. But the damage, even if there would be a damage, there would be probably no more than 3 to 5 million bags. which is not can be easily absorbed, considering the fact that in the last 2-3 years there was a surplus in production. The second reason is the commodities and raw materials shortage due to the very well-known logistic problem related to ports. We have a lack of containers, a lack of ships, and this creates a kind of a double cause of shortage, because on one side, growers are a little bit waiting before to sell the coffee because they hope for a higher price. On the other side, there is, as a matter of fact, a real logistic difficulty in sending. This creates a lot of volatility and speculation, which of course is very much in trend with other commodities and other markets.
So, Andrea, how much of a difficult is it actually to run Illy Cafe, or to see, some of the dynamics there into next year? How long can this last? I know you also mentioned some of the supply, some of the shipping issues, and then I think there's things going on in Colombia, for example.
It is difficult because of these externalities that I mentioned. We are fortunate enough to have created a direct sourcing supply chain since 3 decades. And the partnership relationship with our growers, with long-term contracts and long-term let's say, collaboration mitigate this impact. Otherwise, it would be really be difficult. We are adapting flexible in order to ensure the supply, the sourcing that we need. And we hope we will be able to overcome this complicated moment in 12 months from now.
Andrea, overall, if you look at coffee beverages, that market is booming as a lot of your competitors and yourself are getting bigger. Will there be a point of consolidation because there are too many players out there?
I think that the consolidation did already happen in the market, because in the last decades there has been a major consolidation by 2 large groups, which now account for over 40% of the market, the roasted coffee market, which are JAB, the challenger to the consolidated Nestlé leadership, and Nestlé, which of course reacted in order to consolidate its leadership. And so now I think there are not so many deals to be made around in the world. And we are more on the side of trying to understand if there are possibilities to innovate the product, let's say, offering, both with new origins and new varieties and new preparation methods in order to make coffee more sustainable and more attractive to the younger generations.
I read this very funny article, Andrea Illy, saying, Americans like their coffees big and sweet. Can Illy try and get them to drink espressos? How's your foray into the U.S. going?
So the United States is the largest coffee market in the world in value and probably also in volume. It is for sure the largest gourmet coffee market, where premium coffee, which is our segment, are consumed. There is a significant opportunity for trading up, consuming even better quality and more authentic quality. This is why we are investing heavily for accelerating our growth in the United States. We have been around in the States since over 40 years now. We have thousands of consumer touch points with hospitality places like restaurants, cafes, and hotels, including also a lot of distribution in the home channel. And in order to accelerate, we decided to seek for a local partner. This is why in February we had the opportunity to welcome a private equity fund, Ron, into our shareholding, and we are now working together, seeking the synergies for accelerate our growth in the States.
Andrea, I have to ask you a little bit as we go on to COP26 about some of the sustainability pushes that agriculture, especially, when it comes to coffee, needs to do to be fair trade, but also better for the people picking it. I know there's concern about maybe children in certain places use it as well. Is there a shift, a global shift for the industry to become better at some of the things they do?
Yes, I would say at least that there is a very good intention and awareness that we must do it. Before in mitigation, which is a priority per se, because agriculture altogether accounts for 28% of the greenhouse gases emissions, agriculture has a significant problem of adaptation because climate change is impacting the agricultural systems and jeopardizing productivity. The good news is that the actions to put in place in order to adapt and to mitigate climate change are the same. And this is the so-called non-conventional agriculture, which is based not any longer on monoculture and intensive productivity and an intense usage of agrochemicals, but rather on carbon soil enrichment, which also creates an opportunity for carbon sequestration, using microbiology for increasing, for healing the soil and making it more fertile and resilient, and increasing biodiversity. This can go along and should go along with the agroecological approach, which is also increasing the natural reserves. So make agriculture a net sequestrator and improve the quality and health of producers.
Andrea, very quickly, it's International Coffee Day. How are you celebrating? Extra coffee? Less coffee?
Well, we celebrate by giving a lot of room to younger generations, telling us their recommendation how to innovate the coffee market in the future.
Okay, there
room
you
to
go.
Younger generations.
Yeah, I'll maybe just be having an extra espresso. Andrea Illy, thank you so much, the chairman there of Illy Café, joining us this morning. Of course, he has just been awarded the Leonardo Prize for promotion of Italy's image around the world. Now, coming up, the supply chain crisis continues to wreak havoc on global trade. We get the view of DP World Chairman and Chief Executive Sultan Ahmed bin Sulayem. That conversation is up next with our Manus Cranny. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, supply chain issues are plaguing the world, and the boss of one of the world's biggest ports operators says we're likely to see problems carry on through next year. Well, Bloomberg's Manus Krani spoke to DP World Chief Executive Sultan Ahmed bin Sulayem about that and where he sees the strongest growth in trade flows.
The strongest today, no doubt about it, is India. There's huge potential, and that reflects our investment. One of the largest investments we did in the world is in India. Of course, Africa continue to grow, and then will be also Southeast Asia, mainly Indonesia, a huge growth. And we have a new port there we're building now. And then, of course, the Pacific side of Latin America. We feel the growth is there.
Do you think there's lots of discussion at the moment that they're seeing perhaps a rollover in trade in China, or things are beginning to slow down between China and the West? Are you seeing any slowdown in shipments at all?
It is the effect of the pandemic. The pandemic have disrupted the supply chain. And in particular, China. China is the factory of the world. And the pandemic is not just in the beginning. Even now, every time they see an incident of COVID, they will lock down a port. And today, many manufacturers around the world are delayed by 3 years because they cannot get the components from China.
How long do you see these supply chains and blockages lasting?
I believe for a long time. It's not something you're going to see disappear, because the effect and delays of the cargo accumulated and stuck is a lot. And that is reflected in the cost of shipping. Containers are shipping freight skyrocketing.
Well, let's just draw on that a little bit. So it's not going to be a short term end. Do you see it running these supply chain blockages through 2022 and beyond?
Probably 23, maybe we will see the ease of it, in my opinion.
Do you see any easing in freight rates? Freight rates are up, what, 700% on some cargo?
Absolutely.
Will that level of price rises endure?
Let me tell you, it's not just the freight rates. You can't find an empty container. Empty containers are a problem. We are buying containers for our customers because we have many customers who are looking for containers. So freight rate is continuing to increase. The shipping lines is having an amazing time now.
When you see China's one belt, one road, has that been an obstacle to you acquiring assets, the Chinese initiative, or do you say, actually, that's an opportunity. If they're here, I should be here?
Basically, most of the Belt and Road pass through our ports. So China is building ports where there is now no ports to make sure they go. But I tell you, I have an interesting thought about Belt and Road. Oh. Belt and Road is built on everything coming out of China. How do you make things out of China faster? The pandemic was not an issue before. I'm wondering whether that is still valid, because there is an obstacle in China. Are Chinese going to move their manufacturing outside? Because obviously the supply chain is being affected. The Belt and Road concept came before COVID. I don't know whether it is the same idea now.
Well, that was the DP World Chief Executive Sultan Ahmed bin Sulayem speaking to Bloomberg's Manus Krani at the Dubai Expo. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Jefferies reported record investment banking revenue for the third quarter. It also said its deal-making backlog reached an all-time high. Shares have surged more than 50% this year. Jefferies' earnings are closely watched as a prediction of results from larger rivals like Bank of America and JP Morgan, which report later. BlackRock has told employees it will start its return to office pilot program on November 1st. More than half of staff will be expected to work in the office at least 3 days a week, allowing up to 2 days of remote work. The world's biggest asset manager says it will assess over the next several months how well employees can collaborate under its Future of Work program. Disney and Scarlett Johansson have settled their lawsuit over her pay in the Marvel superhero film Black Widow. Terms were not disclosed. The actor had sued the entertainment giant, claiming its decision to release the film online reduced her compensation, which was tied to movie ticket sales. Both parties issued statements saying they look forward to working together again. That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Coming up, a new power cable offers some relief for the UK energy crisis. We'll get more on a new link from Norway, which started trial operation this morning. This is Bloomberg.
might have impacted China's growth because it is already slowing. Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, part delays, chip shortages, settled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, the supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again, and discontinuities. And that is because of what we spoke about, the demand that is pent up. And of course, if you have factories slowing down and, not being able to produce as much, that is going to impact growth and the recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, today, the first flows of renewable electricity will flow between Norway and Britain. That's a bit of relief for the UK as it grapples with an energy crisis that is sweeping through the economy and putting suppliers out of business. Now, with this latest link, there will be now 7 power cables between the UK and various European countries. Joining us now is Will Kennedy, Bloomberg's executive editor for energy and commodities. So, Will, first of all, good morning. So this is basically a cable that goes from Norway to the UK. How much power does it actually bring with it?
Yes, it's the world's longest undersea cable built so far, and it brings 1,400 megawatts, which is, to put it into context, what a large nuclear power station would produce. So it's significant, and as you said in your intro, Francine, it comes at a time that's extremely useful for the British power market, which has been under considerable pressure this month, trying to match demand and supply, and it will replace some of the power that we lost when another interconnector with France had a fire in September, knocking out 1,000 megawatts until the spring.
So, Will, how much will it actually help? So we're seeing this North Sea link. It goes from basically Fidel to Blythe. And then what happens afterwards? Could that be increased? Could we see more of these type of cables? Or is it a timeline problem because it takes years? I
mean, it takes a lot of time to build them. But, the UK has long relied on power from overseas, especially France, which has tended to have cheaper power than the UK. So there's been an opportunity for traders to import electricity from France's nuclear power stations and put it into the UK grid. And at times we're, getting maybe 5% of our power from France. It helps, and it adds to the flexibility of the European power system. The European Commission has long wanted these sort of cables between different European countries so that, we can do these arbitrages between different places depending on different weather and demand patterns throughout the continent. So it's a useful piece of infrastructure given the stresses we're seeing in the European power system at the moment.
So, Will, when you look at gas prices and we see what's happening in China, we're seeing, across the world, there seems to be a race to actually secure energy. First of all, why are we doing it now and not before? Has something gone wrong, or we just hadn't thought about it through?
Well, I think it's a mixture of several things, Francine. We had a pretty cold winter in many parts of the world last year, and the gas industry hasn't really been able to catch up in China, in Europe, in Russia. Inventories are much lower than they normally would be. In Europe, they're at the lowest in 10 years. So there's been a real scramble to secure sufficient gas supplies, and that's come at a time when the economy is coming out of lockdown and rebounding pretty fast. And it's been a pretty energy-intensive lockdown. So there's a lot of industrial demand for factories and from chemical plants for natural gas. And so traders are having to compete there as well. And it's really just we're seeing in these spiking prices a mismatch between demand and supply.
Will, thanks so much. Will Kennedy there with the very latest on energy. Now, Bloomberg Surveillance Early Edition continues in the next hour. Danny Berger joins me here in London with Katie Lyons in New York. We'll look at the markets, and the markets actually still in the red, but not as much as they were a little bit before. So we're losing some for example, for the DAX, it's 0.9%. The FTSE down some 0.6%. The focus, of course, on U.S. politics. This is Bloomberg.
The electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose for this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
It's essential the debt ceiling be raised in a timely fashion so we can pay our bills.
I think it's important that this be done on a bipartisan basis.
The consequences of that failure to do so would be potentially severe.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lyons.
It's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, October 1st. Our top stories today. Stalemate on Capitol Hill. A battle between Democratic factions keeps the House from voting on that $550 billion infrastructure bill. The global energy crunch goes from bad to worse. Natural gas prices hit an all-time high in Europe. And get ready for the fourth quarter. U.S. and Europe start the new quarter with declines after the S&P 500 capped its biggest monthly sell-off in more than a year and a half. Well, good morning, everyone. I'm Francine Lacqua here in London with Danny Berger, Kaylee Lyons in New York. Matt Miller off this week. Now, Kaylee, quite a lot going on in the markets. We're seeing pressure that started in the U.S. because of, I guess, political machinery over in D.C. And now with the bill could be delayed or it could be reduced.
Yeah, a lot of remaining questions on the fate of the infrastructure package, the bipartisan one, and, of course, the trillions of dollars in reconciliation, socially oriented spending. Now, of course, it is the first day of the fourth quarter, also the first day of the month of October. Remember, we're coming off of September. That was the worst month for global equities, going all the way back to March of 2020, of course, peak pandemic fear. I would note that in Asia, China and Hong Kong closed for holidays. China will actually be closed for an entire week. So pay no mind to the green on the screen when it comes to markets go for China on the Bloomberg terminal. But stocks were open in Japan, fell 2%. We were down in South Korea and Taiwan as well. And in other asset classes, I would point to iron ore. It has had an extremely volatile week, up 7% on Monday, down 5% Tuesday, up another 4% over the last 2 days. But once again, futures are down today, albeit on light trading volume, down about 2%. In foreign exchange, the Chinese yuan is really what catches my eye. It is stronger against the dollar by about 0.2%, but it is at the strongest against a basket of 24 of its peers, going all the way back to 2016. So that could have implications for the Chinese economy. We will see if we get a response from policymakers on that yuan strength once we reopen from the holiday. And finally, I would point to the South Korean won as well, at its weakest against the dollar, going all the way back to September of 2020. Now, here in the U.S., as Francine said, we are coming off the worst month for the S&P 500 since March of last year. And once again, we are not on firm footing when we look at futures trading this morning. Right now, S&P 500 futures down about 0.6%. In the bond market, we are basically flat on the 10-year yield. We are south of 150 right now at 148.92. The dollar is also flat as well, but of course it was earlier stronger for the fifth day in 6. And then I would just point to oil, Danny, down 0.9% right now. WTI crude trading at 74.34, but still oil heading for its sixth consecutive weekly gain.
Well, let me tell you, Kaylee, we could definitely use some easing off on these energy prices here in Europe. We did breaking inflation numbers for the euro area. Seeing those prices continue to rise, of course, there's this question of what central banks can actually do to it, with inflation flirting with a multi-year high. Now, in terms of these markets, it is a gross day outside. If you're here in London, it's rainy. It's as Kit Jukes over at SocGen put it, it is duvet day. You just want to curl up and not look at anything. And that's kind of what's happening in these markets as well. We're seeing the Stock 600 down about 0.8%. Again, we are seeing a little bit of reaction to those breaking CPI data, that euro area inflation jumping for the month of September to 3.4%. The immediate estimate was 3.3%, so that is more than we had expected. Now, in terms of what's performing in these equity markets, every sector is down today. It is all doom out there, except for one, and it's utilities. That really shows us the extent of this move for risk off. It's really textbook when you have this very safe sector like utilities being the only one that can outperform. You have a euro versus the pound pretty much flat. I wanted to bring up this cross because we often talk about cable. Well, it's not just cable. It's also the euro gaining against the pound. It was earlier today, but we're starting to see that ease off. And finally, in terms of some of the more frightening markets ease off, I'm looking at European natural gas down 2% at 95 euros. But just hours ago, this hit 100 euros for the first time ever. That round triple digits, definitely a frightening prospect, Francine, when we're looking at these inflation woes and, yes, stagflation woes really capturing the attention of European markets.
Yeah, certainly with that euro inflation number climbing at the fastest in 13 years. Now, this is a look at what else is going on today. So first of all, let's have a look at what's going on in the U.S. Now, actually, let's start with Dubai. The delayed Expo 2020 Global Trade Fair kicks off in Dubai. It'll be one of the world's biggest in-person events since the pandemic started. Now on to the U.S. and the U.S. House Democrats delayed a vote on the infrastructure plan to do today due to lingering issues between progressives and moderates in the party. We also hear from two Fed presidents. Philadelphia's Patrick Harker takes part in a virtual discussion on the economic outlook. Cleveland's Loretta Mester takes part in a virtual moderated discussion on inflation and employment. And finally, Hong Kong celebrates National Day, marking the founding of the People's Republic of China in 1949. Well, starting in Washington, President Biden signed a bill yesterday to avert a government shutdown. However, House Speaker Nancy Pelosi sent lawmakers home without voting on a $550 billion infrastructure bill with plans to try again today. Democratic disagreement continues with Senator Joe Manchin saying he wants the social spending package cut by more than half.
My top line has been 1.5 because I believe in my heart that what we can do and what the needs we have right now and what we can afford to do without basically changing our whole society to an entitlement mentality. I don't fault any of them who believe that they're much more progressive and much more liberal. God bless them. And all they need to do is we have to elect more, I guess, for them to get theirs, elect more liberals. But I'm not asking them to change. I'm willing to come from 0 to 1.5.
Let's get straight to Emily Wilkins, a Bloomberg government reporter, joining us from Washington. Emily, so are you actually expecting anything today? We could get a vote, or does it just get postponed until next week?
So Speaker Nancy Pelosi left the Capitol late last night, saying that work would be continuing today. The House is still in town. They are still expected to take votes today. And if you talk to some of the more moderate members who are pushing for a vote this week, they're still very optimistic that something can get done. But the path forward here looks really tricky to do this in the short term, in the next 24 hours. There's still a lot of debate about exactly what needs to be in this bill. As we saw from Senator Manchin yesterday, he wants that 1.5 trillion number, and it's unclear exactly what that means for the funding of priorities. However, Manchin did reaffirm yesterday he does want that reconciliation package. He wants childcare. He wants elder care. He wants health care components. It's really just a matter of how that is wind up being funded and whether those funding numbers are something that progressives will be on board with.
Emily, at the end of the day, this is President Biden's agenda. What is the administration trying to do to get this done?
So President Biden has been taking this tack that Biden's really honed throughout his time in Congress of meeting with members, hearing them out, trying to talk to them about things. Last night when Senator Manchin came back from the White House and entered Congress, he told reporters, that there wasn't a big finalized deal, that there were negotiations left to go, but it's a lot of talking, a lot of listening. And President Biden has really focused on these efforts. He, remember, canceled that trip to Chicago earlier in the week to stay behind, to continue to negotiate. And a lot of individuals who I've talked to in Congress think that Biden's going to be a bit of the secret sauce here, that his involvement is going to sort of help push people towards yes, remind them that this is his agenda that he ran on and he has promoted to the American people.
All right, a busy day to round out the week. Emily Wilkins of Bloomberg Government, thanks so much for keeping us updated. Now to Europe, where gas prices hit a record as the energy crunch worsens around the world. Let's dig into this more with Rachel Morrison, Bloomberg's energy reporter. Rachel, with China leadership today also directing the nation to supply energy at all costs, are we about to see a global bidding war for energy supplies?
Yes, we have traders saying that the news from China really lifts the ceiling on prices. There is really no limit to how high prices can go now that we know that China will be in the market for supplies of coal, for supplies of liquefied natural gas, and will be willing to pay high prices in order to secure those supplies. So it really is everybody going after the same supplies of energy, the Europeans, Asian liquefied natural gas as well. And that's going to just keep pushing prices higher.
How much higher? I mean, this is one of the biggest concerns, Rachel. If everybody's after them, is it just who, pays more that will have access to it?
At the moment, it seems that nobody's going to step in to limit any prices. And there are various forecasts as to how much pain people can take. I say people because it really is consumers that will feel the effects of this eventually, because companies are buying the gas and the coal in order to supply homes with electricity and gas. And as we go into winter, today is the first day of the winter heating season. So we will all start to switch on our heating systems and everybody expects to have a warm home. And it's just going to be how much leaders will allow their citizens to pay for access to these supplies.
All right, an evolving saga. Bloomberg's Rachel Morrison, thank you so much. And let's get back to the markets now and take a look at the fourth quarter, beginning on a risk-off note today after the S&P 500 posted its biggest monthly sell-off since March of 2020. Let's get more on this with Bloomberg's Ritika Gupta. So, Ritika, we were still in positive territory for the third quarter, but just barely.
Yeah, Kaylee, you're right here. So we're actually coming off the worst month for September, going all the way back to March of 2020. And you're right, for the quarter, we did just eke out a gain of 0.2%, but still the worst quarter, going all the way back to the first quarter of 2020. This was the height of the pandemic here. So on the index now, we are some 5% below the record highs on September the 2nd. There's a lot of nervousness, even from the bulls here, that the technicals at play here. We haven't been below that 200-day moving average in 317 sessions. Now, in terms of sectors, in the month of September, it was really only your energy stocks that got gains here. All the other sectors in the red. But if we zoom that out, take a look at the quarterly basis, it was energy still down some 2.8%. And it was financials leading the pack. And there's a lot of questions here about that rotation that we were just starting to see, really, from those growthier names to cyclicals, whether that will still persist. Of course, now we are also dealing with this global energy crunch as well. So that could really weigh on the outlook, too.
Ritika, feels like a lot of gloom for a Friday. Is there any good news you can tell us in terms of what expectations are for the fourth quarter?
Yeah, Danny, if we flip up this board here, and I'll also describe it to the radio audience, we can see some of the Wall Street strategist views by year end. The average is for 44.66, so we sit after yesterday's sell-off some 160 points below that. But there is a wide range here. If you look at the highs, it is 48.25, and the lowest or the most bearish at 3,800. So a wide, not so much consensus here, but then you've got to think we've got a lot of risks out there on the horizon, whether there is that debt ceiling looming, the limit for that, and also those supply chain risks and the potential of a Fed taper coming this year as well. So all of this weighing on the outlook.
Yeah, and creating a very wide gulf between the bulls and the bears. Thank you so much to Bloomberg's Ritika Gupta. That's a look at markets on the macro level, but let's get some micro stories and some stocks moving in pre-market trading this morning. And I have to begin with Lordstown Motors. Of course, it's the EV truck startup. We got news on Wednesday night that they were close to a deal to sell their factory in Ohio to Foxconn. Then we got news last night that, in fact, they have inked that deal. $230 million sale of the factory, plus Foxconn's going to buy $50 million worth of shares. So that stock is up 4.4% before the bell. Another mover to the upside is SunPower, of course, the solar company. This is on news that it's going to be added to the S&P Midcap 400. That will be effective as of October 5th. But in anticipation of that, shares getting bought in early hours this morning, up about 9%. One mover to the downside, though, is IronNet. It is a cybersecurity software company, and this is after it filed for a potential sale of shares from the company and some of its shareholders. As a result of that, that stock sinking in pre-market trading by about 13.4%, Francine.
Kaylee, thank you so much. Now, coming up live from Expo 2020 in Dubai, L'Oréal Group Chief Executive Nicolas Hieronymus. And then a little bit later, we talk markets with Maria Wittmane, Senior Multi-Asset Strategist at State Street. This is Bloomberg.
What have we learned from this Evergrande crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we've seen many events, right? Maybe in the fintech sector and education, casino, and property. So I think diversification help you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue is like a buyer strike. because of the sentiment. The Evergrande is hurting the sentiment, and people don't want to buy. And other developer, because they want to get cash.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger alongside Francine Lacqua in London, Kaylee Lines in New York. Energy has really been gripping the attention of markets, especially here in Europe, with prices skyrocketing. Well, I want to look at a chart and want to welcome our radio listeners as well, which I will explain this chart to you. So I essentially have two lines on here. They're both Bloomberg commodity indexes, but they're the sub-indexes. So one of the lines I have for our viewers in white, it's the industrial metal sub-index. The other one is energy. You can see for much of the past year, they track each other pretty closely. Not surprising that commodities would be correlated. However, over the past few months when we've had this energy crisis, again, for our radio listeners, what we've seen is a pretty large divergence. We've had energy outperform, now gaining nearly 80% for the past year. And at the same time, the industrials index has been lagging, around 40% gain for the year. Now, our next guest says that over the long term, it's going to be this bottom one, the one that's underperforming, that plays catch up and is ultimately the one that will do better. Let's get to that guest. It is Eddie van der Wal of Bloomberg Markets Live. So, Eddie, give us the bullish case for these industrial metals.
Yeah, absolutely, Danny. There's been a lively debate on Markets Live about, just where do you pitch your tent in these two camps. Some of them have been very bullish on the on energy stock or energy materials. But really, the bullish case for metals is much stronger in the longer term. Yes, we have this energy squeeze in Europe, but at some point that goes away. Whether we wait for summer, that's a question that's worth asking. But at some point that goes away. The shift to the green economy and to a clean carbon world, that needs a lot of copper, it needs a lot of metals, and that is not going to go away for the next few years.
So what does that mean, Eddie, in terms of supply crunch? I mean, could we actually see, parts of our economies frozen because we're just not investing enough in some of the things used for the green transition?
Oh, absolutely. I think that is a risk. I think the green transition is dependent on us having enough commodities, everything from lithium to cobalt to nickel to copper. And we don't have enough of that, right? Right now, that we want to speed up the shift. We may not be able to speed up the shift, certainly not at the prices that we have right now. The thing is, though, with a lot of these commodities, we haven't been looking for them for a long, long time. We haven't been looking for lithium for centuries, right? We've only recently started using it. So there'll be a lot of undiscovered resources out there. It'll take a while to tap it. But something like copper, we've been using it since Roman times, right? We know about all the major resources out there. We're not going to go out and just find tons and tons of new copper.
Obviously, Eddie, commodities dealing with this energy crisis. You also have yields that have broken out and what has been a surprisingly strong dollar over the last week or so. What bearing do all of those assets have on risk appetite more broadly right now?
Absolutely. These are absolutely interlinked, Kaylee. I think the big thing, the big factor to consider here is that, as energy prices go up, and not just in Europe, but oil prices as well, as they go up, that feeds through into the rest of the economy. That pushes up inflation, that forces the Fed and other central banks to tighten faster. It's not something that they want to do, but I think, the energy crisis is just forcing them to do so. But that makes OPEC's meeting next week very interesting.
I was going to say, what can we expect from OPEC's meeting next week?
Yeah, I mean, we are hearing that as much as, I think the first thing to know is that OPEC would like to pump into rallies. Right. OPEC would like to bring some supply back to the market, not as an altruistic measure, purely because their bottom line suggests that it's better for them if they have more oil on the market. I think we're talking about something like 400,000 barrels per day as a potentially live decision. But I do think that OPEC brings more oil to the market. That brings energy prices broadly a little bit back, notwithstanding the issue in Europe.
Eddie, thanks so much. As always, Eddie van der Veld there from our Bloomberg Markets live team. And of course, for more analysis, you can check out MLIV Go on your Bloomberg terminal. This is Bloomberg.
What did you think at the low point of the Greek economic debacle? What were you thinking about to make Greece recover as it has?
Well, Tom, we took over in July 2019 with a very clear mandate to make the economy grow again. We were hit by the pandemic, but we still managed to implement very significant reforms. And I think we used the fiscal room that was available to us to support the real economy. We're very encouraged by the recent data. The economy grew 16.2% in the second quarter of this year. We revised our forecasts upward to 5.9%, and this may be a pessimistic forecast for 2021. We see lots of interest for foreign direct investment by American companies, European companies. We're making big progress in digitizing the state. We have a very ambitious green transition plan. And overall, I think the mood in the country after 10 years of crisis has significantly changed.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
How did you make the decision to move to the Bahamas of all the options out there?
We've been looking at the Bahamas for a while. They're one of the first countries to roll out any comprehensive regulation for cryptocurrencies, which we think is extremely important for the space and a really positive sign.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua and Danny Berger in London. Now let's get the first word news. And a business lobby warns that confidence is falling off a cliff. People running small and medium-sized business companies in the UK are broadly negative about the economic outlook for the first time since February. That's according to the Institute of Directors survey. 3/4 of those surveyed are bracing for higher costs in the next 12 months, and companies expecting to increase investment are in a minority. Shareholders at Daimler will vote whether to split off the truck division from the Mercedes-Benz luxury car operations. It's a vote that could boost the valuation of both units. The move is designed for the businesses to react faster to industry-specific trends like battery power and autonomous driving. Zoom and call center software provider Five9 have scrapped their $14.7 billion merger agreement. A steep decline in Zoom shares cut the deal's value by almost a third. That led Five9 shareholders to reject the offer. Two advisory firms had recommended voting against the deal, saying Zoom's prospects have fallen in a post-pandemic environment. And BlackRock is starting its return to office pilot program on November 1st. The world's largest asset manager has told employees that by then, more than half the firm will be expected to work in the office at least 3 days a week. BlackRock is rolling out the program over the next several months to gauge how well U.S. and European employees can collaborate while working up to 2 days a week remotely. So it's so interesting, Danny. We see all across Wall Street, banks in Europe, everybody taking a different tack when it comes to return to office. You have BlackRock saying November 1st, people are going to start coming in. But Wells Fargo saying, nah, we're pushing it out until 2022.
Exactly. Of course, who knows? These firms could end up pushing it out even further. Though I have to say, calling this the, quote, future of work, Francine, makes it sound like a very fun program versus the sort of, hey, can you get your behind back in your desk and in the office? It might bring more people back in if it's named like that.
Yeah, but here I feel like the City of London is absolutely packed. You can't find a taxi because of fuel shortage. You can't get a coffee because there are so many people in pantries in everywhere, really, in the city. I don't know whether New York is quite as back as London, or whether it's just a different approach from the government, Kaylee.
New York is coming back. I actually saw a story that traffic is almost back up to pre-pandemic levels, which is exactly the kind of way that I would like New York not to come back, because my commute is getting a lot longer. But it is. You can feel the energy. There's more people on the street. So it's starting, even if we're still far from being fully normal.
Yeah. Wait, Francine, can I just say it took me an hour to buy a salad at lunch yesterday because the line was so long.
Go for the fries. Less millennials.
Always good advice. Always
there
good advice.
There you go. That's what I'm here for. Coming up next, live from Expo 2020 in Dubai, the L'Oréal Group Chief Executive, Nicolas Hieronymus. It's a conversation on energy, supply chain disruptions, sustainability, and of course, consumer luxury. This is Bloomberg.
Boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? Should probably up that some. You get infected 3 times, it's like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix with Danny Berger in London. Kaylee Lyons in New York. Matt Miller is off this week. Danny, if you look at the markets, there's definitely a sell-off. It doesn't look great because it is a new quarter, but concern about, of course, the U.S. politics and what it means for everything to do with infrastructure bill, and then concerns still about energy.
Exactly. I mean, it really is that energy story that's so important and crucial with what's happening in these European markets. You're seeing them vastly underperform the U.S. today, and I go back to how Kit Jukes at SocGen just so perfectly captured it today, writing on Twitter, it is a duvet day. Yields are higher, stocks are down, the weather outside is miserable. It's winter, the energy crisis is going to get even worse. I, for one, would be totally happy just curling up in my bed with a book, never looking at these markets until things get better.
There you go, with popcorn after the shift and after the show. Kaylee, what are you seeing in the markets?
Danny really just making me want to get to the weekend and get in my bed immediately after work. In the markets, of course, as Francine alluded to, it is a new quarter, it is a new month. Not starting October, though, off on a great foot after the worst month for global equities going all the way back to March of 2020. Granted, in Europe, we are off of session lows. Still, though, we're down about 0.7% on the stock 600. It's really banks leading the declines today. And here in the U.S., futures also in negative territory, though, again, off of session lows. S&P E-minis right now down about 0.5%. Not a lot of action to report in the bond market. We are literally flat on the U.S. 10-year yield, sitting at 148.75. But I did want to point to Bitcoin, up about 3.4% today. We're back around that $45,000 level, just underneath it. So, of course, with a move in Bitcoin, you can expect crypto-related equities are also moving in tandem in pre-market trading. Marathon Digital, Riot Blockchain, each up about 3.5% to 4%. A few other idiosyncratic stories as well, one of them being Lordstown Motors, the EV truck startup. It is selling a factory in Ohio to Foxconn, raising some much-needed cash. That stock is up 4.25%. To the downside, though, Olaplex Holdings, this was a newly public company. It just made its trading debut yesterday, rose 17% in that session, but giving a little bit of that gain back today, down about 2.3%. And of course, Francine, full disclosure, Olaplex is the shampoo and conditioner I use.
I know, and apparently Olaplex actually made the Chanel family, the owners of Chanel, much, much richer than they were just 3 weeks ago. Now, on to cosmetics. The delayed Expo 2020 Global Trade Fair kicks off today in Dubai. It's one of the world's biggest in-person events since the pandemic started. L'Oréal Group is the official beauty products and services partner, and the company has chosen the event as a platform to launch new innovations and share its vision of the future. Let's get straight to Nicolas Hieronymus, L'Oréal Group Chief Executive, joining us from Dubai. Thank you, Nicolas, for joining us again. I have many questions about maybe some of the downfalls in trade and supply that we're seeing, but update us first of all on how your products are selling. Are people buying more makeup post-pandemic as we all go back to work?
Hello, Francine. Well, first of all, I'm very happy to be with you here from Dubai and happy to answer your questions. As far as beauty is concerned, I hear a lot of worries here and there around the business, but the beauty market is very dynamic. On the first half of this year, the beauty market bounced back at plus 11%, and L'Oréal, as you know, grew twice the speed of that market at plus 21. And of course, there are shifts within categories. Mask wearing is not great for selling lipstick, but it's great for selling mascaras and eyeshadows. Our skincare business is exploding, and one of the great things about the end of lockdowns is that even though people don't wear that much lipstick, they wear a lot of fragrance, and fragrance is the epitome of socialization, and that's it's great for our business as we are the worldwide number one in fragrance. So overall, pretty good prospects for the future, as beauty has proven its ability to grow.
Nicolas, when you look at skincare, so I think it's booming in the U.S. Can you replicate that model for China and Europe? Are shopping habits that much different from region to region?
Well, overall, skincare is growing all over the world. It is by far the biggest category in China and in Asia, and it's always been our growth engine in China. It's now accelerating in the USA, doing good in Europe, and it's a global concern because, not only because masks can create some irritation or acne, but because people's skin is exposed to external factors such as UV, pollution, and needs to be taken care of, protected, and that's a long-term trend that's going to carry our growth, and particularly that of our active cosmetics division, which is by far our fastest growing business, with brands like CeraVe, which you might know, or La Roche-Posay, which are really dear to consumers all over the world.
I mean, there seems to be headaches actually for any global supply, whether it be shipping because there's lack of drivers in the UK or some of the energy concerns that could have also led to factory shutdowns. Amongst the list of worries, what, which is out of your control, do you worry the most about?
Well, you know, as far as energy is concerned, and particularly gas prices, we have a very low dependence upon energy. You know, we started our decarbonation a few years ago. Today, 72 of our factories are carbon neutral, and overall, we are not so much relying upon energy and gas prices. As far as supply chain is concerned, it's true that today there is a global tension on transportation, on containers, on some raw materials. But I would say as we have a global footprint and with factories all around the world quite close to our consumption places, we have not been that affected. There's one place where we have been affected. It's mainly the USA, where both workforce shortages and some raw materials shortages did not allow us to satisfy the over demand that we had on a few products. So I would say that our base business was okay, but we had a couple of brands that went crazy in terms of consumer demand. I mentioned CeraVe, but it's been this brand has doubled its business last year, doubled it again over the last 6 months, and typically this kind of increase, even though we are flexible, we're not totally capable of finding the raw materials and the people to manufacture it. But overall, our business is doing good, and we have the agility to manage this type of shortages, which I think are only short term as the economy is going back to growth right now.
When you look at some of the challenges ahead, I know there's been a big push to try and be more sustainable. How difficult is that if you also need to increase your prices? Can you pass on prices that both are coming from an increased cost because of sustainability, but also just inflation in general?
Well, sustainability is not a new adventure or a new crusade for L'Oréal. We started our L'Oréal Sharing Beauty with All program a few years ago, and since 2015, we've reduced our carbon emissions by 80%, whilst increasing our production by 29%, and we did not have to increase our prices to do so. So it is manageable to reduce the impact and to increase the sustainability of our products without having to increase prices too much. If I take plastic, for example, we are shifting to recycle plastic, and we have committed that by 2025, 100% of the plastic we'll use would be either recycled or from biosources. And you can offset this type of decision through plastic reduction, so reduction weights, through more refillable products. So all in all, it's a 360 degrees approach, which we think can be managed without increasing prices, even though all research say that over 80% of consumers say they would be ready to pay a higher price to have more sustainable products.
Nicolas, talk to me a little bit about the Dubai Expo. Is it good to be back in front of clients and people alike? Does it actually make a difference at your level on who you meet to look at partnerships or even look at shipping agreements and things like that?
Well, I must say it's fantastic, and I wish here, Francine, it's fantastic to be in a place with people exchanging ideas. It's the first big event since the pandemic, and all these pavilions, these countries, these companies that are here bringing new ideas to create a world that is better, that is more sustainable, is very in line with our own sense of purpose, create the beauty that moves the world. And it's a fantastic opportunity, of course, to listen, to learn from others, but also to showcase our own creations or ideas to make beauty more sustainable. We are showcasing several brands here with great ideas. We have particularly something which is what we call the Salon of the Future, so the hairdressing salon of the future, where you've got everything from recycling bins, from water-saving showers. You save 65% of water while using this incredible shower head that we developed with a little startup. So many things, and so we're here both to learn and to show all the ideas, and as a leader, hopefully to inspire others to make beauty even more sustainable.
Wonderful. Thank you so much. It sounds like fun and getting ready for COP26. Nicolas Hieronymus there, the L'Oréal Group Chief Executive. Now, coming up, we go back to the markets, maybe talking about some of the inflationary pressures that the L'Oréal Group Chief Executive was just talking to us about. Mariana Wittmane, State Street Senior Multi-Asset Strategist, joins us. This is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
From New York City.
We're here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
front. How are you thinking about those dynamics?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Equity markets have been confronted to a kind of wall of worries in recent weeks.
Over the next 3 to 4 months, we're facing a host of uncertainties.
I wouldn't be surprised if we get a little bit more selling over the near term for several reasons.
The market is certainly set for some form of correction.
We are in I would say, a small correction.
We continue to believe that investors are just underpricing the risks.
Pick your reason to be bearish, hard to be bullish when there's so many kind of missiles coming out of nowhere.
Some of our top voices on Bloomberg striking a cautious tone as a new month and new quarter begin. Joining us now is Maria Wittmane, Senior Multi-Asset Strategist at State Street. Maria, I know that you are often more bullish than most. Is it time to start getting more bearish as we enter the fourth quarter?
Yeah, hello. I know it's a very, very difficult week to talk positively about the markets, but I have to say, I mean, our key reasons to be constructive are still there. So I'm probably going to stay in by the deep camp. I mean, we still very, very constructive on earnings outlook. I mean, I can't help but be impressed how strong corporate and consumer balance sheets are. It's really, really unusual to come out of crisis in a better financial conditions than you came in. So earnings to our mind are fine. In terms of interest rates, that's a really big unknown, but I suspect we've probably seen the most of increase, so we should be okay.
Okay, so Maria, let's talk about earnings then, because Francine was just doing a wonderful interview with the L'Oréal CEO talking about a lot of the supply chain pressures are out there. That equates to higher input costs for a lot of companies. Do you expect them to be able to retain margin?
Yeah, that's a very good question. And I think it's a question of price versus volume. And that's kind of what I was trying to allude to earlier on, and kind of thinking that there is a lot of demand. Companies have a lot of money to invest on CapEx. Consumers have a lot of money to spend. And we know that kind of net wealth is higher than it was pre-crisis. So there is money to spend. So we expect top line to grow, definitely. You're absolutely right on margin pressure. I mean, so far the forecasts are encouraging, but we're really kind of excited about top line more than the margin.
Given that, Maria, do you want to target the more cash-rich value type companies in the coming quarter and into next year?
I think, I mean, value is a very broad, and you probably know myself not being a big fan of value. I think you have to be specific. And I mean, sectors like energy probably look really, really interesting from kind of a value spectrum. We like industrial companies. We like discretionary companies. I'm really, really excited about potential for CapEx cycle. As I said, there are lots of cash to be spent. There are lots of need to spend cash. We are talking about greener technology. We are talking about replacement cycle. So yes, those trends are there, but I think you have to be selective. Absolutely.
Right. Well, speaking of being selective, you do like industrials, but it's interesting to see this latest rotation over the past few weeks. Energy has been doing well, yes, but industrials haven't. Is that trend, you think, going to change?
Yeah, as I said, I'm really excited about CapEx cycle. And this is a longer-term trend, longer to medium-term trend that companies can spend money.